Hi, welcome to the Market Alert for Friday, the 19th of November 2021. An important day today is the options expiration for the stock indices and equities, and I'll get to that in just a moment. The main narrative wins today again. The pain trade remains intact, i.e. moving the market to the upside. No end in sight, as you'll see on the overnight as well. And I can attest to this pain because yesterday afternoon I was short. I had 60 or 70 points in the bag and then ended up getting stopped out at break even as the market came back, and that's only because I wasn't aware of this, that the House set for debate passage of the Build Back Better in Thursday night session was over just the next 5 years the deficit will grow to 792 billion. I'm not going to go to the details of this. I have read it this morning about 4:30 to see what it was all about, but they had a vote yesterday on this, and halfway through the debate one of the senators decided that he wasn't going to vote for it, and that's what sent the market lower. Then he changed his mind and the market came back, so that's what the reason for that was. And the spike overnight to all-time highs is based upon that news. So growth, stocks near record highs to value, Bitcoin battered to 2 month lows, hope or no hope, option expirations first, then seasonals save us. So what do we mean about this? If we come to here, we've got this headline for yesterday: stocks bond yields plunge as option expiration looms. And here we've got this is the bit really. It says Bloomberg notes the total number of outstanding contracts on equity index and ETF options expiring stands at 95.5 million, a hair away from 95.6 million in July. So the only thing you can do with this is this. Let's go and have a look at the German Dax Daily for this same period, and this is the 16th, 15th. This is the 16th. This is when the last option expiration was just under 96 million, and you can see what happened on the Monday. Then the market came back. So that was in July. That's when we had those same figures. Now, I'm not saying for 1 minute we're going to have the same scenario during today's trading session because we've got these other factors in the background. But if there is weakness around this morning, well, mid-morning towards lunchtime as the US opens and they start to liquidate these options as they expire, then you could see a bit of weakness. But as you can see from the German DAX at the moment, we're just making new all-time highs, which I mentioned yesterday. It's very difficult to fight the short side on this one. It really is. I mean, like I say, I tried yesterday, it was fine. The market went down beautifully, stop at break even, just in case we had weakness overnight. Then there's news that comes out that is bullish, and they move the market straight back to the upside. So the long side is still intact, and as I pointed out yesterday to a friend, the market's not even getting anywhere near to closing below the 5-bar average. That's how bullish this is at the moment. It will change at some point, we know that. But at the moment, they're using whatever news they can to keep this market moving to the upside, which is plain to see there. So let's have a look at yesterday. We'll start off in the morning. I'm just a bit back to front today, but there's, like I say, the reason for this is just to bring the option expiration to your attention, just in case you get a lot of volatility later today. So yesterday morning, the market really wasn't doing an awful lot, and then some weakness came in. Again, we put in new all-time highs. You can see this here. And the market, well, actually, that was the day before's high. You'll see the new all-time high in just a moment. And then in the afternoon, the market sold off. We had massive volumes here. And this is when, I can't remember his name, I think it was Manchin, the senator that voted against the bill. And then he changed his mind, and then the market came back. And you'll see this in more exaggerated form in the Dow in just a moment. But overnight, you can see the reaction to the votes. The market straight through the 251 level and has put in a new all-time high. Already this morning. In fact, as I'm recording, we have a new all-time high in the DAX at 16,292. I mentioned the 300 level, which is here. We're going to sail through this, aren't we? Even if it's just to pull people in on the upside before they eventually get around to shorting it. But so we're already through the all-time high as of recording this video. So let's have a look at the Dow's reaction to yesterday. And you can see the market moving lower, traded down to the 78.89 in the daily chart, and then move back to the upside. Here's the sell-off, which you can see there, and then they buy straight back in at the S2, and they bring the market back, and it's straight back up to yesterday's high where the market first sold off. So again, it's just engineered, financial engineering to the downside, and then brought back on the basis that there's some good news. But what can you do? It's long all the way, and now the Dow in the daily chart, of course, once you get the option expiration out of the way, is free to move to the upside. And if it does, then you're going to see the DAX move to make even more new all-time highs and head towards that 17,000 target as it is at the moment. And to add to this, I just want to throw this into the mix before we look at the metals. If Biden picks Brainard over Powell for Fed chief, expect an immediate market impact. What does it mean about this? Well, apparently Biden, God preserve us, has been interviewing both of these two, whether Powell keeps the job or Brainard gets the job. The difference is this chap here, old Powell, he wants to raise rates, etc., and she doesn't. Now, if she doesn't want to raise rates, they're going to go for more QE. Tapering will be removed, as it says here. If Lyle Brainard is named for Federal Reserve Chair, the first move by financial markets may be to price in an even more dovish central bank. And what we mean by dovish is that, as I've just said, that basically that rates will remain as they are, and she will go back to QE, which, in fact, in fairness, Powell will go back to QE as well, because tapering won't work. Go back to January of 2018 and take a look. A few months later, we were back to QE, and that will be the same. The only difference is Brainard will probably do it immediately. So the market will love this. Now, apparently there's going to be an announcement about this over the weekend, according to this article. So again, any shorts held overnight, on Sunday night, you're likely to see the market jump once more if Brainard is selected as a replacement to Powell. I was just scrolling through it because there was something that I did read in this about the impact. Oh, here we go, market impact. This is what he was saying about Powell. I think you'll get a 10-minute bounce in the stock market if Brainard gets the appointment. Well, I think it'd be a bit more than 10 minutes, personally, based on the other part of the article, and you'll and the Treasury market, where you'll see steepening of the yield curve. Yeah, absolutely, because she won't want to raise rates. So let's see, that's coming over the weekend as well. So interesting, more bullish sentiment if Brainard is selected now. So let's move on to the metals, which really haven't done a lot this week. They're sideways and under pressure. I'm still expecting to see another shakeout in silver, to be honest with you. And I'll tell you why. Because yesterday we saw the dollar moving lower, and silver also move lower with it, which is not good. It's not a good sign. We've still got this problem of the 200 bar moving average. And again, we've got the option expiration at lunchtime. And the usual tricks yesterday, go to the 5-minute chart and roll over. There you go. Oh, look, it must be 130. It must be, let's go back there. Oh, it must be, 130. You can just keep going back and picking the days. You can see it more on the 30-minute chart. That was yesterday, down and back. Was on the news, of course. There's the day before. Oh, look, it's just blatant. It's either in the Asian session or it's in the 1:30 when they have the London fix at 1 p.m. So yeah, silver under pressure for me. That looks under pressure at the moment. It's below the 5-bar moving average, and it's red as well. Meanwhile, gold is holding quite well, actually. There's a bit of demand for this yesterday as well, but we still need to break this 78% retracement with some sort of conviction. And all hinges, I suppose, on the dollar there, which is attempting to move back, even though there's some weakness around there. News today, before I conclude, we've got retail sales from the UK. These are pointing to an increase. We'll have to wait and see. Again, it'll be bullish if it does. The criminals out at 8:30, so watch that in the DAX as well. And then we've got FOMC, some minor celebrities again, Waller and Clarida, they're speaking, and then we've got a tentative Treasury currency report, which will be out after the DAX, I would imagine, has closed, or the cash market will have closed at 4:30. So there you go. There's a quick roundup of everything that's going on. A lot going on, and like I say, really the DAX is the one. There you go. It's just made another all-time high as I've been recording there. And then we've got the futures to open shortly, and be straight through the 300 level, which is here. And then let's just have a quick look in the 30-minute. Again, we've got nothing above here now, so let me just we're looking at R2s and R3. So there's your upside target, which is only 100 points away, which would be 16,400 would be the upside target for this today. Yesterday the market came down towards the low, or hit the low yesterday, which you can see, and then just went straight back, as we would expect with the low as well, which was a warning sign when I was short. Actually, I should have just taken the money, but I was hoping that we were going to get a continuation and a correction. But like I keep saying, you've got to trade what you see, not what you wish to see. So there we go. That's it. New all-time highs today, and no end in sight. The move is parabolic, and we know how parabolic moves end. They end like this. It's the classic staircase up. I'll get the drawing right, and then as prices move up, and then it's the elevator down eventually. But when will that day be? It'll be when the central banks want it to be, and at the moment there's no sign of it at this point. Okay, that's it for this one. If there's anything else to report, I'll let you know. Have a great weekend. See you on Monday.